in India and tech stocks, interpretation game is all about interpreting whether AI is going to help software companies or it's going to hurt. And that's been the raging debate when it comes to India for the last so many weeks and months now. So this gives us the perfect segue to invite Ramesh Lakshminarayanan, Group Head IT Chief Information Officer at HDFC Bank. Ramesh, thank you very much for joining in today. I think this is our first conversation, live markets. We have so many of these Indian IT companies, and they've been battered out of shape because of two concerns. One, fears of revenue deflation, and two, perhaps enterprises like you will move to AI agents and therefore reduce the work or the spend of Indian IT companies. Now, you are in an enterprise, you work with Indian IT companies. If you could tell us the extent of deflation that you've seen. So when your contracts come up for renewal, how much are you pricing it down? And is there a thought to reduce the services spend and maybe experiment with these foundation AI models? Oh, I think you're on mute.
Thanks, Rima, for having me here. Can you hear me? Am I audible?
Yeah, we can.
Yeah, no, thanks, Rima, for having me here. First time on this show. Glad to be here. I think it's still very early days, to my mind, in terms of putting the impact together. Look, this space is changing very fast. I think every week we are seeing some announcements. Every day, in fact, there is something new coming up, and enterprises don't necessarily react in that way. So you need to kind of give it a little bit time. We will calibrate. As of now, like I said, we are very focused on what we are building and how we are looking at the entire AI space. And while we're kind of dealing with our partners, we're looking at saying how do we really, navigate to the new age solution. I mean, today, for example, do you really need to build a SaaS application? And if you really don't want to build it, what is the alternative? If agentic AI has to come in there, how can the partners help it? That is the conversation that I'm right now kind of seeing. Early days, I think I don't necessarily see the recalibration happening in a very, deflation rather happening in a very big way. I think there will be recalibration to my mind. The models will change very, very fast, and we will see how this goes.
So if you could, quantify that sort of recalibration, because just before we were having this conversation with Julian, who was speaking about the key monitorable here being productivity gains, right? So if you could give us a sense on how this will work for you in terms of either one, reducing response time, increasing service quality, improving as a result of which the sort of revenue or conversion rates, those metrics that you monitor, and on the other part would be reduction of costs. So on both those parameters, have you set yourself any target or have you seen any initial trends and any potential that you can quantify here?
Yeah, I think it's again, like I said, the way to look at it is not look at isolated use cases and say, hey, I will get a certain percentage. The way we have looked at is, can you go back to the foundational processes? See, just overlaying an AI on top of an existing process is not going to make sense. And the reason I'm saying is, take a simple example like acquisition journeys. In the old world, you will have the UIs, the click-throughs, certain number of screens to go through. In the new world, maybe it will just be an AI, a window on top of it. And that doesn't mean the process behind it kind of changes in the sense that, you will probably have some extraction engine pulling a document. You will have a scoring model that's running in parallel. Now, can that, for example, reduce the first time right? That's one of the big KPIs that we track. In fact, that's one of the initial KPIs that we're trying to move towards, saying when we get something like that, can we get the documentation right for the customer when he comes in? Second, is the turnaround time. I mean, clearly, the number of hops that you go through, especially in some sectors where the acquisition is still not fully digital. I mean, for example, in SME sector, you might.
Oops, we'll try and
multiple kind of iterations before you kind of approve. That is the other part that we are kind of looking at very carefully. Then, of course, we do have the third part, which you said, our own productivity. I think there we are seeing gains, especially in the back-end coding side. Coding is a capability. See, the way we see this whole landscape play out, you need to look at what capabilities AI will drive. For example, bank has extraction, core extraction as a capability, search as a capability, voice to text, text to speech as a capability, coding for our own development as a capability. So when you're building this foundational layer, can you get your first time right? Can you reduce your turnaround by X? Can you kind of obviously reduce the cost? The way we are seeing all the three playouts are happening depending on the use case. And one of the principles that we have used here is to build a centralized platform here. Unlike many of the market movers, we've not gone to a third-party partner. Actually, we built our own platform because our idea is to have a centralized AI platform that's able to enable all these use cases, and thereby the measurement of the KPI or the measurement of the benefits is real and it's on the go actually. So that is the approach we are taking. So it's kind of right now early calibration. We are seeing definitely benefits, especially in turnaround times. I would say that's the first part. And second is definitely reallocation of the resources to the front end in some of the key projects. So these are two areas that we are definitely seeing some benefits.
Okay, hi sir, good morning, good to see you. Well, if I take a reference point, global banks like JP Morgan, they spend a large amount of money on tech, on AI, cybersecurity, and other initiatives as well. As a percentage of revenue, it's ballpark around 10%. But as a percentage of expenditure, it'll be closer to around 20%. Would you all look to increase your digital spend?
So I think we are again pretty much on global benchmark standards. It's similar ranges that we spend in if you go and look at it. And see, technology continues to be an area of investment. I mean, those days are gone when technology will be a support function in a bank. In fact, HDFC has a very different thought process in the way that we are pivoted from a partner-driven technology development. While we do work with a lot of partners, but certain areas we have very strategically pivoted to a factory approach, where we are building a lot of our digital products. So we've got factories in Bangalore, 2 factories in Mumbai, 1 in Gurgaon, and then we just opened 3 days back in Guwahati. Why are we doing this? Because just like some of the global banks, if we don't convert ourselves into a technology development first kind of a company, we're not setting ourselves for future. So obviously the spends are going in that region. So the nature of the spends is changing. It's no longer about looking at maintenance BU, while they're very critical, resilience and all of that area is boxed in, and those costs continue to kind of go at the same level just to ensure that there are no hiccups. But the spends are moving into areas where you can kind of see the business benefits quite quickly, especially in the area of AI-driven development.
Okay, just one final question. We can keep it short. As the nature of spends is changing, the fear is that it's crowding out the spends that would have otherwise gone to IT services companies and vendors of yours. Now, you yourself have taken so many internal projects. You're doing it yourself. In that sense, what is happening? Is it negative for Indian IT companies?
I think they will have to relook at the model, Reema. I think that's the fundamental take that I have, because just the T&M model or the application development through people, those days are gone actually. So really the value that they bring to the table. So let me give an example. I mean, for example, if somebody comes to AI solution, for example, in detecting a fraud opportunity, I think that is something that we would kind of take a look at it. Hey, tell me how is your fraud model more effective, and is it kind of market benchmark to detect better fraud controls? That would be the conversation, and not saying, oh, I will need this many number of people to do a project or this many resources to a project. So the entire conversation is changing to value adds actually, and not basis resources, and that's going to be a significant shift for the IT services company. And I think they are calibrating as we speak. Some of them will calibrate faster, and those are the ones that probably will come out winners in this race. The way I see this, as they start getting ready for this AI rush.
Thank you, Ramesh, for joining in with your insights. Great conversation.